Unbiased Trading here, and for the last part of how to create a setup using data, we're going to be going over custom data points, alternative data points, how you can implement them, a couple examples, a couple real life examples that were used in hedge funds. And yeah, let's get into it. So, data points. Custom data points are data that are selected and analyzed by traders for the purpose of informing their trading decisions. In day trading, custom data points can come from various sources. This could be financial markets data, economics data, alternative data, and price data. Custom data points are often used in conjunction with technical indicators or other factors, such as moving averages, oscillators, and so on, to gain a more complete and nuanced understanding of market conditions and potential trading signals and filtering of trading signals. Now, custom data points can provide a unique perspective on the market trends and conditions, and it can help traders identify potential trading opportunities that may have not happened otherwise. By using custom data points, traders can create their own unique trading setups that are tailored to their outlook and intuition in trading. The use of custom data points can give traders an edge in day trading, helping them make a more informed and accurate trading decision. And overall, custom data points, I think, is where a lot of edges can be found. And also, as gone like on previously, time can be a great edge builder as well. If you want to learn about that, then check out the other videos as well. Now, a quick example could be EMAs. So EMAs are exponential moving averages. They are a technical indicator commonly used in day trading to measure the average price of an asset over a specific period of time. The EMA places more weight on recent prices of an asset, making it a more responsive indicator than a simple moving average, for example. Now, if you were to use this as a custom data point, a potential use could be in a mean reversion trading strategy that assumes the asset's price will eventually return to its average price after moving away from it. In this context, the EMA represents the average price of an asset, and the median average of the percentage away from the EMA at high of day represents the deviation from the average. Now, to use this strategy, traders can calculate the median average of the percentage away from the EMA at high of day over a historical dataset, so let's say 5 years, for example. Then, if the deviation is significantly higher or lower when you're actually trading it, then the median average, traders can use this to interpret this as a potential mean reversion opportunity. Now, this strategy has been around for quite a while. Some great Japanese traders, I believe, back in 2007, 2006, really used the strategy. And it still works today. I think there's probably more things you have to add to it. But this is a great kind of like basic foundation of it. Now, another kind of example of this is if the deviation is significantly higher than the median average, you would look to enter short, and you would expect the price to eventually return to the EMA, and you'd probably also calculate the probability of that, and know that's what you're kind of optimizing for. Now, conversely, if your deviation is significantly lower than the median average, you may look to enter a long position as they expect the price to eventually return to the EMA, just in the opposite direction. Now, this is a very simple use of this data point, and there is no reason why one single data point should be the foundation of an entire strategy, but it is always a good idea to make the heart of a strategy as simple as possible. Now, another type of data can be financial data. This can be used to evaluate various aspects of companies' financial performance, such as its revenue growth, earnings, profitability, and debt levels. By analyzing this data, you can determine a company's potential for future growth and profitability and make a better informed fundamental view of a company. I'll highlight that fundamental data is frequently distorted and at times even fabricated, especially in the small cap arena, not so much in the large caps, and even more specifically in Chinese companies. Watch the China Hustle to understand more about this. I also provided a little summary on my Twitter. If you are interested, my Twitter can be found below. This is why I focus less on fundamentals, but I have met some incredible traders who use fundamentals frequently and even have core strategies around it and are way more successful than me. So this isn't to say you can't use it. This is simply to say that I personally don't think I could really use it currently. An example you might look at is in small cap company revenue growth over the past several quarters to determine if it is still growing at a sustainable rate. If the company's revenue growth is strong and consistent, this may indicate that it is less viable for a short intraday strategy as it has strong fundamentals. On the other hand, if the company has consistently low revenue growth and high debt levels and maybe is even unprofitable, this may indicate a lack of potential future growth and even profitability, and it could be a better short in your strategy. It is also worth noting that finding reliable fundamental data in the small cap world can be tough, and dilution data isn't currently available, at least to the public. Hopefully, at some point, if it is released to the public, that would be great. This hinders the overall edge building by only using the fundamental data because I personally try and kind of utilize this in my 20% of discretion by periodically viewing dilution tracker and the company's balance sheet instead of creating a whole data set based on fundamental data that could be inaccurate. Now, for alternative data refers to data that is not traditionally used in financial markets analysis, such as market data, economic data, and financial data, as mentioned before. Alternative data can come from various sources. This could be social media, macro events, and even the costs of a company's HQ. An easy example of alternative data that I think after 2020 most traders will have experienced in real time is social media. You can use social media to judge if there could be a momentum intraday on a ticker by evaluating the public opinion of a specific stock or company. Positive sentiment on social media platforms can indicate bullish sentiment and potentially drive momentum if the stock price continues to rise, while negative sentiment can indicate bearish sentiment and more likely there could be more sellers. Now, social media has become such a big alternative data set. Some firms and even retail traders use social media sentiment for intraday trading strategies. Traders can analyze real time social media data to identify trends in public opinion and make informed trading decisions. This can be done through various methods such as natural language processing or NLP algorithms, which can automatically analyze large volumes of social media data to determine the overall sentiment towards a specific stock or company. Be sure to Google about this as it can be a very fun rabbit hole to go down. And you'll see how we have language models running on social media, and then they actually go short based on words said or the amount of words said on a particular stock. This has also been done even with the Fed meetings, and there's actually quite a lot of strategies. If like Jerome Powell says a certain word, it will go short or it will buy. Not saying these are profitable strategies or anything, and you'll have to look into it yourself, but it can be a fun rabbit hole to go down. Now, thank you for taking the time to learn about how to use custom data points in trading and overall how to use data to create a setup. I hope you found this information helpful and informative. And if you're interested in learning about how to use data in your trading and develop probabilities for your strategies, I would encourage you to check out the link below where you can go to the landing page of my website and book a call with me for free. Incorporating data into your trading strategy can help you avoid trading blind and have more of a data informed approach to your trading. Thank you for watching, and if you enjoyed, please like and share it with anyone else who might be interested.